GM, everybody, it is Thursday, the 21st of August. Let's get straight into it. Bitcoin is pulling back. Obviously, we made the high last week. This is back on last Wednesday, so just over a week ago. And we've been selling off now basically for the last week. I did talk about looking to de-risk into the end of August, selling some leverage positions, bracing for a choppy late August going into September. And that's exactly what we're seeing. Obviously, I talked about the most recent path that I put on the charts last time I made a video update, which was this red path, thinking, look, I think there's a possibility we reject from here and we actually just chop sideways over the next couple of months into late September when I expect us to then start to push more aggressively to the upside. And that seems to be what is playing out. So I'm not expecting moves much lower. I know one or two people are out there starting to call for moves down to 100K, 99K. I think we'd need a really big catalyst for this to happen. What might that catalyst be? Well, it could be the Jackson Hole event tomorrow. So, or I believe it might be even kicking off today. So obviously, Jerome Powell comes out very hawkish and talks about less interest rate cuts over the remainder of this year, or no cuts, or even the possibility of having to raise rates if they can't get a handle on inflation. Obviously, the market would really not like this, especially after the market has been pricing in rate cuts aggressively into the end of this year. I think at one point it was about 3 to 4 rate cuts. Maybe that's going to be one or two after tomorrow. And obviously, if the market looks to reprice, maybe we will come down, flush these lows. This could take us down, I think, as low as 109, 108,000 would be, for me, a pretty nice sweet spot to really flush out the liquidity below our current lows. And then we could actually put in a higher low and we could see then things then start to run to the upside. I'm just looking here. Do we actually have a trend sort of going across here somewhere? Potentially we do something like that. Or the other thing we could do is connect these highs and see if we've got any confluence here or even here. I don't know if this is going to sort of line up with anything coming in a little bit higher, but you get what I'm saying. I'm really thinking we could come down just a little bit lower here, try and find some support, and then bounce. If we look at the 5 day, we can see that the 5 day we started to sort of roll over. We have a bearish engulfing candle on the 5 day. So obviously on a longer term time frame here, that's not looking too good. And then if we just go over to the weekly, what have we got on the weekly? We're coming into these weekly bands here. So I mean the low side of that weekly band around about 107, that's going to be rising up. So potentially we come into support. Like I say, my target personally is for a low is between 106 and 110,000. I think we come somewhere sort of into this kind of this vicinity down here, just below this support. Obviously, this support might hold, but it makes sense for me for there to bit of a scare, bit of a flush, for people start to say, well, we've lost the 110 level. The next big round number is going to be 100K. We're probably going to go down there, and I think that's where we see support come into the market. Of course, we can also draw this one across as well. So, there will be different levels of support coming in, like obviously more minor support coming in that we could bounce from. But to be honest with you, I think the market makers will just be targeting the liquidity down here. Obviously, we do have this 100-day moving average along here, which is currently that's around about 110,700. So call it 111,000. By the time we get down there, potentially that is an area I'd be looking for a bounce. And obviously, if we get it might be that we do something like this. We come down into this pocket, we get a bounce up here, fail at this long-term trend line, and then we get one final flush down under these lows in September, and that potentially could be sort of three tries of bearish divergence as well on a daily, and that might give us then the catapult higher into Q3. And I'm expecting Q3 to be obviously a good a good quarter. Sorry, Q4. So going into October Q4, and I'm expecting that to be a good quarter for cryptocurrencies. So in terms of what I'm doing right now, I haven't added back any of my leverage positions yet. I did sell pretty much pretty close to the highs, so I'm quite happy with that. I sold a bit more on Monday as well when we couldn't get above the the highs from the weekend, and we started to sell off and take out those lows, and then losing this 50-day moving average and this long-term trend line. For me, that was a good point to de-risk. So obviously de-risked at the top, de-risked on the breakdown. I think we are going to see some lower prices. That being said, prices under 112,000, I am looking to scale back into the market. I won't be going all in, but I will be scaling in over really this period here from sort of late August to mid to late September. I think any dips are going to be good for buying in expectation of this run up. And like I've said, even if we broke higher, I would have still been expecting a pullback to similar prices that we saw trading earlier on in the month. That's why I was starting to de-risk here, because I said, look, I can de-risk a bit here, and actually what I can do is if we do go higher, then I can just re-add probably at similar prices in September times after the September correction. So that's what I'm thinking. Obviously, the fact that we've pulled back and we haven't pushed on, that does give us the risk of coming down lower. But we just need to see really what the volatility is like over the next few days. I think the main volatility drivers are going to be this Jackson Hole, where Fed Chairman Powell is going to be speaking, and then it's going to be the September FOMC, which I think is around about the 17th. So those are going to be the key sort of volatility markers over the next month, and those are going to be the key sort of timeframes, any dips that I'll be looking to take advantage of. Because even if Powell is hawkish, it's probably not going to change. Well, it's not going to change what the data says. And we know that the Federal Reserve have been data dependent. They keep on pushing out the same narrative every single FOMC meeting, that they're watching inflation and they're watching the labor market. So, whatever Powell says about, or whatever way he interprets that data, isn't really relevant in the long-term scheme of things, because if inflation falls, he's more likely to cut rates. If inflation keeps rising and rising aggressively, he's less likely to cut rates. So it really comes down to the data. But obviously, his comments could give us some volatility that provide a quick dip for us to get long into. So that's Bitcoin. I won't talk too much about other cryptos, as I want to keep this a really short and snappy one, but we can see the stock market also starting to pull back. We've got a daily 9 candle here. This is obviously a green 9, so it's a 9 sell. So this is a candle that typically, where you look to take profits, we can see the last two daily 9s have led to consolidations and corrections. I think we've probably seen a small correction here, and I'm just looking at where we could go. I mean, potentially we could come and flush these lows here and come as low as, I think, 6,100, 6,150 is definitely on the cards. Meet up with some of these longer term moving averages, come and retest some of these highs from the start of the year. I think that's definitely on the cards for the S&P, the Nasdaq as well, sort of breaking down a little bit quicker here. Potentially it could come in and retest closer to 22,000. And if we just look at the size of these pullbacks, I mean, coming down and retesting highs from earlier on in the year in the Nasdaq would be a 7% pullback. I think that is completely realistic and reasonable. And at that point, I would be looking to add back into some of the stock positions that I've trimmed. And the same on the S&P, you're looking at about just over a 5% pullback here. I think that would be healthy. And, I wouldn't be expecting a greater pullback than that. Of course, when we get down here, I'm sure people will be start talking about like much, much lower targets. But I think it's too early to preempt those targets and those levels. Let's see where we're at when we get down here. But anything really below, I'd say 6,200, below this low here, I'm going to start to position in on stocks and also crypto. So obviously everything's correlated together. It's important to keep an eye on the dollar here, because obviously Jerome Powell's comments are going to impact directly what the dollar's doing when he's talking about rate cuts, when obviously his tone is flipping between hawkish and dovish. This is the market that is going to move first. This is what's going to lead everything else. And we've actually seen a very, very high positive or very negative, high negative correlation. So a strong inverse correlation coming back between the stock markets and the dollar. You can see the dollar pretty much bottoming last Wednesday. And if we look at the stock market, it pretty much topped. I think it was the same day. It was around about Wednesday, and since then it struggled to go higher. So it's been coming off since then. The dollar's been rallying since then. Strong inverse correlation. Bitcoin also similar correlation here. One important thing or interesting thing to say, we are coming up to a 9 buy candle on Bitcoin. So obviously the 9 sell candle happened absolutely to a T last Wednesday, and since then it's been pulling back. Obviously, if we do get some acceleration down, forming a nice sort of bullish wick on any candle tomorrow, and start to reverse like into this support area, then I would think that that is a really good area to start to get some long positions back into crypto for myself anyway, just in case we don't actually drop down lower. And obviously, we, like I say, we've got this chart with our path, so maybe that happens over the next couple of days. Maybe that sort of happens even as soon as tomorrow, and we start to bounce from there. And like I say, it might be that we go a little bit lower than that later on in the month, but I wouldn't be expecting us to go significantly lower, especially considering that I'm expecting Q4 to be a very bullish quarter for both stocks and crypto. So it's time to lock in. It's time to pay attention. It's time to have your finger on the button, in my opinion, because this market is about to really start to get moving quite quickly. We're coming to the end of August. We've only got 10 days left, and then we'll be in September, and you should start to see the volatility pick up to both sides, and potentially we'll get some opportunities to either get back into the market to add to positions. Obviously, if you're holding positions here, my advice at this point would probably be just to hold on, as we've already started to come off quite a lot. Ethereum, really same plan, looking for the pullback towards 4,000, maybe just sweeping 4,000 and then looking to reconsolidate and go again into the cycle high. So yeah, I'm going to wrap it up there. Thank you very much for watching. If you have enjoyed the content, please do smash the like, hit subscribe if not done so already, and I'll be back very, very soon with another update. Bye for now.